Here we go again. Emerging markets are continuing their dramatic decline. This isn't geographically focused. We are looking at this all around the world. Countless countries are watching their currencies depreciate, and the contagion is spreading like wildfire. What will be done to resolve this madness? You came here for the truth, so let me unveil that for you. Today we're going to look at emerging markets. This has been a continued process all throughout 2018. We watched the stock markets fall, we watched the currencies fall, but what will be done to backstop the losses? I want to begin by taking a look at China. The Shanghai Composite has been devalued this year, decreasing this year. We've watched the currency being devalued a little bit, and looking at this, there have been some positive notes along the way, but they have been erased by further weakness. All right, now we're sitting at 26.64. If we look at it where it was at the peak in 2018, compare that till today, the market is down, believe it or not, nearly 26%. This is officially a bear market. I've been covering this, and a lot of people don't want to hear it. They don't want to hear the word bear. They don't want to have to think that that contagion could spread to them, so they make excuses. So they decide to put up these barriers and these blinders which block them from reality, but unfortunately this is the truth. That's the way it's going. Now, we have China intervening directly into their market. We watch it. I showed you just a couple days ago showing the fact that China is in fact intervening in their market directly. They set up the quote national team, and they are buying shares of different companies. That is admitted. It's been going on officially since 2015. They set up all of these different corporations, these funds and entities, and then they go out and buy the companies which they desire. And lo and behold, the companies which they've purchased are the ones that have been doing better than the average, better than this minus 26%. Should that surprise anybody? Of course not. They're the ones there to support it like a crutch, ensuring that it doesn't collapse. They're watching it come down, they're watching the weakness, but that it doesn't collapse. So they'll be there to backstop the losses in the short term. Long term, I'm not sure what's happening, because we have more and more bad news coming out with the tensions between the US and China, and we have to be worried about what's going on. Now, it's not just China that has this problem. We're looking at all emerging markets today and understanding what's going on with their currencies as well as their stock markets and everything, the business and economy that's present there. Emerging market FX volatility is the highest ever relative to the G7 FX volatility. Now, looking at this, we can see that these are clearly an indicator of something to happen. Yet again, I mean, this happens every single time. Look at this. How many times have you heard me say that, by the way? If anybody knows, please post it in the comments. Is it every single video I do? That's 2 per day. That's several hundred per year. Okay, we saw this during the financial crisis time frame, and we saw this during the dot-com boom and bust. And guess what? We are actually higher than where we were the previous 2 times. Is it going to crash because this is happening, because I'm showing you this indicator? Is that what I'm trying to tell you? Absolutely not. But isn't it coincidental that we continuously have all these indicators piling up, and it's been all good up until this point of all that money printing? But what happens when that stops? Oh, everything's going to be fine. Sure. I mean, the economy in the US is really strong right now. They just have interest rates at historic lows, and they have just printed a whole bunch of money, and they can't get rid of all that quantitative easing, and they don't even plan to get rid of it all. In fact, they just want to, quote, normalize it. And that's nothing to worry about because the economy is really strong. Okay, well, I guess we see differently. Moving on. All right. On the left-hand side, emerging market sovereign yield lurching higher recently. whether that is Russia, that's the blue line, or the yellow gold line there, South Africa, seeing how this has been increasing. Obviously, there's more tensions, there's more turmoil, so you will see that happening. On the right-hand side, 2018 emerging market real interest rates. This here is just unbelievable to see all of these. Now, this is not the central bank. This is the real interest rates, how they calculated it, I'm not sure. This is Bank of America that did this. Argentina and so many others. All of the typical countries that I've named over the last little while are really always going to come up here. We're seeing their currencies weakening. The stock markets might be very weak as well, which is quite interesting because in a sense, we should be seeing the stock market rising as the currency depreciates. But when you have a bunch of real money flooding out, then the fake money could come in after that. We'll see how it goes. All right, next, Argentina. We're talking about the IMF bailout that they had. This is out of Fox. They had this bailout. The president's coming in saying we're going to put in austerity measures, including new taxes on exports, the elimination of the several government ministries, which, you know what? Shrinking the size of government, I'm all for that. But new taxes, no thank you. Putting new taxes never resolves anything, and eventually all it does is constrict the public. Okay, that's really what the purpose is. In fact, the IMF wants that to happen because they don't want the economy to do well. If you want your economy to do well, you don't call the IMF. It's a fact. There really is no need to ever do that. You don't ever want to bring in the IMF to help you. It hasn't helped anybody. And so we see those examples over and over and over again. Unemployment is 9%, which I thought it would have been much, much higher, but those in Argentina could tell me if you think that it's 9%. I mean, that is taken, if you look at the capital, maybe it's different. If we look at the smaller cities, maybe it's a lot different. I mean, I don't really know enough about Argentina's breakdown, so I can take a look at it, just the statistics that I see online and from the people I've spoken to, but I've never lived there, so I don't know how it really works. I can tell you based on how I've seen different countries when I've visited them, because I don't just visit to look at the architecture, to go eat at restaurants. I'm there to understand the economy and to understand the culture and so on. I can tell you a lot about what I've seen in my travels to Italy, but that is a different video, and I'll just tell you that boarded up buildings are becoming the norm. Anyway, some Argentines turning to barter clubs, which first emerged during the collapse nearly 2 decades ago. A lot of these individuals in Argentina apparently had held onto dollars. Smart, very smart move in comparison to holding onto their own currency, that is. Be much better to hold on to real assets, but they want something liquid, I guess, and something that they can constantly be using to buy things with. I don't think it's necessarily to keep a big pile under their mattress. But this here shows us that they understand that a crisis is always around the next corner. They're much more prepared than the average American, Canadian, people from the UK, Australia, and so on. So these countries here just don't get it. Everything's always going to be fine. They tend to forget. They have amnesia, and I'm starting to think, you might call me crazy, but I'm starting to think that human beings aren't human beings, and in fact they're goldfish, because their memory is about 5 seconds, and that's about it. And so their attention span is too. All right, so this is talking about the issues that they've been dealing with here, and because of their currency declining, they're watching their expenses just rising very, very high. This individual here, to make donuts, used to spend 150 pesos. That's about $4. Now it's more than 400 pesos. So that's a direct look at how things have changed. That's just one example. I mean, he might be a extreme example, but even if it was 300 pesos, for example, we've watched that double, and that's a problem. It happens when you put different policies in place that make it more difficult to import or export. We can see that when there is a catastrophe in a country, how it affects them, or it could be the devaluation of the currency. It doesn't matter. It could come from any angle, and generally people and the political environment environment, on no level are there any preparations that are being made. In fact, all the protections, which weren't really protections anyway, that were put in place after 2008, 2009 timeframe have all been erased. So anything could happen. In fact, it's much worse when you look a little deeper than what we're being told. I've been told by many people that I don't know what I'm talking about, and in fact, things are more secure today. But you better come back down to earth, get off cloud 9, because you're out of your mind. Year to date versus the USD. Look at this. Whether we're looking at the offshore renminbi, China's currency, Russian ruble, Brazilian real, Turkish lira, and the Argentine peso. These have all come down here, and that doesn't surprise anybody because we've seen the weakness. We've seen it taking place. What about this? Total debt, private and public and private, as a percentage of the GDP, whether we take us from, again, China's, even the US, Eurozone, Brazil, Turkey, they've all gotten worse. All right, it's just going to be that way. Since the financial crisis, everybody is consuming, and they have no way to ever get back into a level situation, a situation that isn't terrible. Just like, okay, we're okay right now. They can't even get to that stage. The steep falls in emerging markets have hurt the ability of developing world companies and governments to issue bonds overseas, making it harder to pay back existing debt and putting potential pressure on economic growth there. After a record 2017, emerging market debt issuers raised less money abroad in June, July, and August than any summer since 2013 in the so-called taper tantrum, when the concern was the U.S. is rolling back on their stimulus, triggered a sell-off across the bond markets. We saw what happened there. I covered it on the channel. Of course, they papered over that in other economies, whether the ECB, we saw the Bank of Japan, the People's Bank of China, they all increased the amount of money that they were printing because the QE3 stopped. So somebody had to pick up the slack, and that's definitely what had happened ever since. Now, this here is just basically getting into some more details. Emerging market companies raising $28 billion in bonds outside their home market. And, it goes on. I'm not going to bore you with the details. But essentially, we have a problem today because these currencies between the US dollar and the rest of them are basically falling further and further apart. That's becoming an issue, not just for people paying for, products to make food to sell because they're a business owner, but it also affects the countries doing business with each other. Okay, so you need to be very, very watchful of what's happening today. But the solution, what is the solution, right? Well, the governments have one that they're preparing right now, and this is one of them. Swiss Village votes for free money. Now it just needs the cash. We're talking about universal basic income or guaranteed income or so on. The basic income, they call it different names. But basically a check for everybody. And in this case, it's 2,500 francs. That equates to about the same in US dollar. We've seen this going on, not just in Switzerland. They're talking about it for Canada and Finland and different places around the world where they end all the other government assistance programs and they just give a flat check to everybody. Everybody gets money. Where does the money come from? We're being told that it's going to be taxes on the corporations, taxes on the rich, taxes on the super rich, the Warren Buffetts and the Facebooks and everything else. They don't pay tax. I don't understand what people don't get. They don't pay taxes, or they pay very, very minimal taxes. They set up their corporations in ways that you and I, if you're working a 9-to-5 job, let's say, you could never do that. But these corporations, massive conglomerates, they have head offices set up in the Cayman Islands. They have them in Luxembourg. They have them in different places, and they're not going to pay. You think they're going to pay? Really? Is that really what's going to happen? The middle class is going to pay. The middle class always pays the price, and people need to start learning that now before the next crisis. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel, so I do appreciate that. And if you want the financial education you were not taught in schools, these 2 books have it all. You can actually get everything you need to know from A to Z. You can then have a handle on your own finances, or if you're taking them to a financial advisor of some sort, at least you can ask the right questions. So check these books out. There's a link in the description of the video. If you're more interested in the audiobook version, you can get that at themoneygps.com.